Welcome everyone to the iConsumer webinar. I am Kimberly Logan, Merchant Manager Extraordinaire here at iConsumer, and it is my pleasure to introduce our CEO, Mr. Rob Grosshandler.
Well, thank you, Kim. And I'm glad you're on this call today because the first question, and we love questions, is one that I hope that you'll be able to answer for us. Today, in a short period of time, hopefully a short period of time, we're going to cover a bunch of things. We're going to talk about what it means to be a shareholder. We're going to talk a little bit about the market, if you will, for iConsumer. As you hopefully know, it's a publicly traded startup. We're going to do a little bit about how it works, because oftentimes people are coming to iConsumer for the first time, and this is one of their first introductions to it. We're going to talk about how to sell iConsumer stock if you must. This is not a priority for us, but we do know that on occasion it is a priority. Near and dear to my heart is the new member referral program, because this is the best way to help grow iConsumer. The holidays are coming. And one of the weird things about iConsumer is our interactions with Amazon. So we're going to spend some time on that. A place to look for additional resources, which includes that Facebook group that Kim referenced, as well as Shareholder Academy. And then we do have time for questions and answers at the end if I talk fast enough. That's not typically a problem, but if it is, we'll figure out what to do about it. We are trying out for the first time live captions. We use PowerPoint to do the slides in our presentation, and it has a new feature. So one of the things that in between or at the end, if you would like to give us a grade on the captions, we would love to know whether it worked for you or not. And those questions, as they come up, we may be able to answer them during the heart of the presentation, at the end of the presentation, and if it is something that's particularly technical, we may choose to get back to you after the presentation. So with that, I want to talk about the three things that make being a shareholder at iConsumer just really a wonderful, wonderful thing. And there we go. Gotta do the mouse the right direction. All right. It's about shopping. It's about sharing, and it's about learning, right? We're trying to make an environment where you can do all of those things at once. You go shop, save some money, you earn shares in iConsumer, and you share iConsumer. And then we think every time you're interacting with iConsumer, it's an opportunity for education. Most people who are investors in iConsumer have never been investors in a startup before, let alone a public startup. So we look at lots of opportunities to make that opportunity, but that a reality. Make it possible for all of us to learn as we're going. Nobody has really done this way before, and so we very much value your participation in making this better for all of us. First and foremost, being a shareholder in iConsumer in a startup is a long-term play. We don't do things designed so today you earn stock and tomorrow you can sell it. That's not why I'm in it. That's not why Kim is in it. That's not why the 50,000 people, 60,000 people who come before you are in it. This is about building something that is going to be worth a lot more 5 years from now, 10 years from now. Look at what happened to Amazon. It's worth more every day. It's been 20 plus years. What's it mean to be a shareholder? Well, you own a piece of the company. We like this because it means that your interests are aligned with our interests. When we do things, it makes it easier to manage. That is, when we decide to raise prices or lower prices or give more stock or less stock, it's because it's making the company better. We hope it's making the company better. And we think that it's making your participation in the company more valuable. When we're successful, you reap the benefits of our success, right? And Everything we do is designed to increase the valuation of the company that you own. I'm going to repeat, this is a long-term play. Now, just because it's a long-term play doesn't mean that you're incapable of doing something in the shorter term. You know, you can't buy something today and get stock tomorrow and sell it on Monday. But over the course of weeks or months, you do have the opportunity to buy and sell our stock. And the ticker symbol for our stock is RWRDP, Reward P. And while we talk about it being a long-term play and we keep focusing on 5 and 10 years from now, I'm sorry, I look at the stock price every day. And the way to do that is you just Google it, type in OTC:RWRDP and see what's happening. So uh, when we talk about it being early stage, I like to comment on some really interesting companies that we're in the same league as, well, or maybe we're the minor league and they're the major league, right? Uber and Lyft and Snap, lots of companies are still early stage. But when they were early stage, you couldn't participate. We made it possible for you to participate. We are public in order to have 1 million plus shareholders. We have 60 some odd thousand, 63,000, 65,000 folks who are shareholders and shareholders in waiting now. This is, I believe, a world record. We are very, very rare. As I said, it is fun to watch the stock price, but with very little importance to the stock price. And I'll get into why we think there may be some importance to the stock price. The goal, we want our stock to be worth $4 a share or better. The sooner that happens, the better off we all are. One of the interesting things to do when talking about a startup is refer to other companies that had something of a path that we would see as a path we could follow. Companies that are in industries or marketplaces that are similar to ours. And so easy to point to are Ebates and Honey, right? We all know Ebates, now called Rakuten. When they sold for $1 billion, actually $960 million, and they had about 2 million members, and they sold for about $400, $435 per member. That's a lot of money. A little bit more recently, Honey, which was founded in 2013, sold to PayPal. They raised about $70 million to get them to where they were going, and they sold for $4 billion. That's billion with a B. And again, just like at Ebates, lots of members, but the people who were really, really happy about this were the venture capitalists who made that money when it sold. Not the members, not the people who brought them to the party. And we think we can do something a little bit better than that. Now, the other thing I wanted to talk about is, as we all know, we're in the middle of a pandemic. And our response to that pandemic has actually come and gone. If you've been watching us carefully, back in March, April, we started doing things a little bit differently. So today, you come to iConsumer, we say, go shop, you'll earn ownership in iConsumer. Back in March, we would say, go shop and you'll earn ownership in iConsumer. But in April, we got a little worried that life was going to be difficult for our members, for our shareholders, and we decided to focus on cash for a while. And so we started doing cash back in April of 2020. We ended that, as I say, in October. The goal there was to put money in our shareholders' pockets rather than try to increase the kind of money that we need to operate. It was a gutsy choice. We did it for 6 months. We were very happy we did it. And I am very happy that we're no longer doing the cash back portion of it. For two reasons, really. There are more than two reasons, but two major reasons. Reason number one, It is easier to talk about iConsumer with a singular message. Go shop, earn ownership in iConsumer. As it gets to be more valuable, your portion of ownership gets to be more valuable too. Simple message. It's not this and that and the other thing. It is singular message. Also, we have a lot more cash because when you go shop, instead of giving you 95% of our revenue, we get to use that revenue to build your company. And that makes it a lot easier to manage. And I really like that. Now, one of the interesting things about this, one of the things I guess I could say I was scared about in October when we flipped back from doing cash back was what would happen. Were our members ready for it? Would shopping increase? Would the number of new members increase? Would the number of members using iConsumer increase? And with 3 weeks of data, so it's still a bit early, I am very proud to share that indeed our revenues increased from when we were doing cash back. Our cash, therefore, increased, and cash is still king in a company like iConsumer. And our new member rate and our new shopper rate seem to also be stable or increasing. Some of these numbers are, again, this is still very preliminary. It's only been 3 weeks. It takes people some time to go shopping after they've learned about iConsumer. It takes stores some time to report transactions to us. But what we're seeing makes me very happy. We're also seeing a stock price increase. And one of the curious things is whether this is correlation or causation. That is, does our stock price increasing cause people to go shop, or is our stock price increasing simply happening because people went and shopped and investors think, oh, or potential investors think, oh, they're going to be worth more? We have an entire post over at Shareholder Academy about this. And earlier today, we sent everybody on our education newsletter list a link to that particular article. So I urge you to go visit shareholderacademy.iconsumer.com and read a little bit about whether or not it is correlation or causation. I don't know, but my gut tells me that our increasing stock price helps our members, potential members, use iConsumer more. So when we talk about stock price, the place I like to go is this link here, otcmarkets.com, stock/RWRDP quote. And we're going to see some examples of what you get when you go to that particular site. We are traded on the OTC market. The OTC market is overthecountermarkets.com. So here's our first screen. This is way back in February I took this, but much of the information is still the same. And I'm going to highlight some pieces you get here. First, upper right-hand corner, you can see the last trade. So when I took this screen grab, it was at 14 cents a share. The other thing that it tells you is the bid price and the ask price. So here it's saying 12 cents and 15 cents, and somebody is willing to sell our stock at 12 cents and willing to sell 5,000 shares of our stock at 12 cents. And somebody, maybe somebody else, I suspect somebody else, is willing to buy 5,000 shares, up to 5,000 shares at 15 cents per share. So that's what those little indicators are. Some other pieces down here that are interesting. So the average volume when this was taken was about 2,000 shares per day. If you go to the OTCmarkets.com site today, or almost any site that allows you to look up a stock price, you'll see that our average daily volume is up rather considerably. But here's also showing you a little bit more about the best bid, the best ask, and the market cap is merely the number of shares out times the last price. So 14 cents times 109,422,380,000 shares. So that's how to interpret that particular screen. So the other thing to see is it also shows you, the OTC site shows you what people have been buying and selling this at. And this screen, it actually has changed. I'm looking at it and say, oh, you know, this screen changed the last time I was looking at the OTC site. So we don't control OTC, they make changes, and we just have to be a little faster. But this screen has not changed, which is the history of the trades for the last 5 days, I think it is, or maybe it's the last 10 trades. And on February 12th, we can see that someone bought, therefore someone sold 9,900 shares at 14 cents. We had a lot go on that day. And then back on all the way to the bottom, January 27th, someone had bought 100 shares at 15 cents. The iConsumer stock is indeed lightly traded. It is highly volatile and rather illiquid. Highly volatile means that the price can change rather dramatically in the course of a day. And illiquid means that not very much of it trades at all. And over time, one of the things that I need to worry about is making sure that we have more and more liquidity, that more and more of our stock trades every day. The theory is that the more stock trades every day, the lower the volatility, the closer the difference between the bid and ask, the smaller the spread is between on the screen we just saw, the 12 and 15 cents. And just on our site, we also have a really pretty picture that you can see on your dashboard that is up to date as of the close of business at 3 o'clock Central Time every day, and shows you the volume and whether our stock went up or down on that particular day. So it's a quick recap of what we're doing. So how does iConsumer work? Why is the stock price perhaps important? How is it we make our money? And we like to think really, really simple, right? You become a member, it's free. You go shop at one of over 2,000 retailers, 2,300, 2,400 retailers. Every time you do that, doing it through iConsumer, whether you use the iConsumer button or you use our mobile apps or you use our website, and go shop at one of those stores, the retailer is actually handling the entire transaction. They bill, they ship, they send us the information necessary so that we can know how much commission we earned and record that. And then we share that commission with you in the form of stock. Every time you go shop at Macy's or one of those 2,300 other stores, the retailer pays us a commission. And at almost all of those stores, with the exception of Amazon, we share that commission with you in the form of stock. You get more ownership in iConsumer the more you go shop. You also earn ownership. I went too far there. You also earn ownership for doing other things that help build iConsumer. For instance, telling friends is the best way to earn more ownership. So it doesn't even cost you anything. We pay money for getting new folks into the fold, and we reward you with both cash and stock. So every purchase generates lots of cash because we're not sharing the cash with you, we're sharing our stock with you. That means that we can be cash flow positive. We can be generating more cash than it takes to run the business with far fewer members, which means we have to raise less money to become a profitable company. We need to have less outside capital in order to become profitable. It
Hey, Rob,
also, yes.
speaking of outside capital, we have a question from Eugene that I think fits into this portion right here. He mentions that we brought Kevin Harrington on some time ago. He'd like to know, what is he doing, what has he done, and what are his plans for the future of RWRDP? Do we have any updates or insight on that partnership?
Well, so Kevin came on board in the fall of 2019, and he came on board for um, a limited period of time. It was a 3-month engagement to help us market iConsumer into the various worlds that he was part of. And our formal relationship ended, I would say it was December of 2019. So we no longer have a formal relationship with Kevin. So what his further plans are, I can't speak to. We were pleased that we were partnered with him. I hope he was pleased that he was partnered with us, but I have nothing to share as to his future plans. The other piece that all this makes possible is it makes it easier for us to manage issuing stock and transfers, so that if you are interested in moving the stock that you've earned outside of iConsumer into a stockbroker, TD Ameritrade or Charles Schwab or whatever, it's easier for us to afford to do this. So we have free levels of transfer and free levels of issuance as well. So if you do want to sell RWRDP, and we're not suggesting that you should want to, but it is a possibility. And one of the interesting things we talked about, the shop, share, learn, because so many people are involved in iConsumer, have not done this before. We're going to spend a little bit of time talking about this. Very, very few people have done the process of investing in a startup and then selling their stock in a stock brokerage firm. So the first thing that you should be aware of is that there is a kind of a company called a transfer agent. Transfer agent is a SEC mandated company for managing ownership, the recording who owns our stock. So the first thing that has to happen, if you're interested in making this happen, is we transfer the keeping of the records about ownership from our books to Issuer Direct's books, and they cost us that costs us $50. That's what they charge us to do that. Then the next thing you need to do, if you're interested in selling, and again, very few people seem to be interested in selling, which is, I think, a good thing. You need to have a stock brokerage account. So Issuer Direct, a transfer agent, merely records who owns the stock. Now you need to put your stock in the hands of somebody who will sell it for you if that's what you want to do. So Fidelity or Interactive Brokers or TD Ameritrade are examples of stockbrokers. And you transfer your stock from Transfer Direct into an account there. Now, it's not as easy as I just made it out to be. Stockbrokers don't want to do that for people that they have not had a long-term relationship with. So it isn't as easy as saying, TD Ameritrade, I want to open an account and transfer shares from Issuer Direct. They will make you jump through hoops and possibly make you wait time. But once you have that established, Fidelity is famous for that, then it really almost is as easy as calling up Fidelity and saying, okay, time to transfer some shares from my Issuer Direct account into my Fidelity brokerage account. And of course, Issuer Direct, this is how they make their money, is going to charge you $50 for doing that. And it takes 5 or 10 days to make the paperwork happen. Then when you're ready to sell, because you can do all these transfers without having any concern or care about selling your stock, you say, okay, stockbroker, sell my shares at XYZ price. Of course, no one's guaranteed that someone wants to buy at that price, or maybe you sell it at a price that's way too low and you get a lot of people who want to buy it. But that's really the process you go through. It's not hard, but unfortunately, it's not easy if you've never done it before. And we do show you on our site the status of the shares that we know about. Once you move them out of iConsumer into Issuer Direct's account and onto Issuer Direct's books, or from Issuer Direct's books into your brokerage account, we lose track of it. We don't know about it. It's Issuer Direct's responsibility or your brokerage firm's responsibility to keep track of it. So this is what we show you when we know about it and it's still on our books. And you want to say, oh, transfer my earned shares from iConsumer into Issuer Direct. And there's the button that does it when you have transferable shares. So I've just told you about how it's a little hard to do it, but I want you to be able to maximize your ownership. So the best ways: always shop on iConsumer. You'll get shares every time you shop, with that exception of Amazon. You are welcome to invest. You can write us a check, and we love to have it. The way you do that is at iConsumer.com/invest, and of course, tell friends. Now, let me get back to that iConsumer.com investing for just a second, because we would sell you shares at 18 cents a share. We're not allowed to change that price at all. Easily, anyways. We can change it, but it takes some work to change it. You're probably better off, if you want to buy more iConsumer shares today, when the stock is 11 cents or 12 cents or 14 cents or 9 cents, going to a stockbroker, going to Fidelity or TD Ameritrade or Schwab, I don't care which one, and saying, I want to buy $500 or $1,000 worth of iConsumer stock. And you'll get more stock for the same amount of money than you would buying from us directly. That's not always the case, but as we talk about this on November 12th, that is the case. All right, so why should you tell friends about iConsumer and earn some shares? Because we have the Supercharged referral program. And I'm not going to go into much depth on it. I've hit my half an hour here, but on our site, iConsumer.com/HTML/tell a friend. It's at the top of every page, how you can refer friends and get $10. But we love it when you do that. That's the best, absolute best way to help us grow. Right? There's what it looks like on our site. Tell a friend about iConsumer. We give you lots of different ways to do it. And you can use any of those, or maybe you come up with some way new. And you get shares just for people trying the iConsumer button even. Right? So that really comes back to what we think our secret sauce is. We think that the more valuable we are, the more likely our stock prices to go higher. That's what every company thinks. We think, though, that the more shopping that happens, the more valuable we will become. And you control that. You, by shopping at iConsumer, you, by telling your friends, help our stock price go higher. And I think when our stock price goes higher, people shop more. As I say, I don't really have proof of that, but that's my gut feeling right now. One last thing to talk about here is the holiday opportunity, right? Amazon is very special. People love Amazon. I use Amazon all the time. Amazon does not give us the data to allow us to reward you with shares, but they pay us 3%, give or take, for every time you shop there. So you go spend $100 at Amazon and we make $3. And guess what happens to our making $3? Our profits go up. Our profits go up. The shares you own are probably going to go up in value. So unlike making nothing when you shop Amazon, you shop Amazon via iConsumer, you help the company you own. We get $3 more. We'll spend that quite well, I'm certain, or not spend it at all, and our profits go up. So if you're going to shop this holiday season at Amazon, please remember to use iConsumer. We even make that easy for you, right? So there's a gift registry link right there. Amazon Smile is one of my favorite sites, as I said, and there's my personalized gift registry link. You can use my link, you can use your own link. And do remember that Amazon Smile is Amazon's way of trying to give back a little bit. So not only are you helping iConsumer when you use Amazon Smile, but you're helping a charity as well. And there's nothing wrong with doing that. Just a quick recap. We talked about that 18 cents a share. Here's the history of it. As I said, you can go to iconsumer.com/invest and learn more about investing directly in iConsumer. One of the great things about iConsumer, the benefits of being a public company, is that by law, we produce financial statements. You can see the inner workings of iConsumer anytime you want. We're already in the preparation mode for doing the 2020 annual financial statements. You can see our profit, your loss, what we spend on X and Y and Z. You can argue with us that you say, hey, you spent too much here, you didn't spend enough there. We also produce that same kind of information on a semi-annual basis. So when you talk about traditional public companies, people talk about 10Ks and 10Qs. In the iConsumer world, because we are a Reg A plus file, that's a special category of SEC filing company. Our forms are called, our semi-annual form is called a Form 1SA. The other thing that you get to see, because when you earn those shares from iConsumer, the SEC treats that as if we're selling you those shares. We always have an offering statement on file with the SEC, which goes into great detail as to who we are, what we are, where we're going, what we think is going to happen, what has happened, backgrounds and historical information. So it's a great thing to read if what you want to know is the depth of information about iConsumer. It's also a great thing to read late at night if you need something to help you sleep. If you need more things to help you sleep, we do have Shareholder Academy, the Learning Center at Shareholder Academy. I want to remind you that support.iConsumer is your friend. That's where you can find knowledge-based articles and quick help tips for how to use iConsumer, how to make sure that you get credit for all the shopping you're going to do. We also have that Facebook group that Kim mentioned a little bit. So all of those things are available to you. The SEC and our lawyers would get very unhappy if I didn't show you this screen, which basically says everything I say you have to take with a grain of salt and make sure you read before you invest. The last thing I'd like to close with, we want your questions. Maybe you'll want my answers. As Steve Jobs said, we're here to make a dent in the universe, and we're here to make that a dent in your universe as well. So I thank you in the middle of this pandemic as the winter season approaches. And Kim, do we have any questions that are worthy of answering? I hope my answers are worthy.
Yes. Allison says, I have a stash invest account where I buy and sell and manage my other stocks. Would y'all be interested in working with them in the future? Would I be able to manage my iConsumer stock through them as a brokerage account? And then in parentheses, she says, I don't plan on selling anytime soon, by the way.
Well, thank you, Allison. Now that you said you're not going to sell anytime soon, I'm more than willing to talk to you. The answer is, I don't know. Some of these, some brokers don't want to handle stocks that are traded on the OTC markets. Or some brokers don't want to handle stocks that trade for less than, call it $4 or $5 a share. I don't know the specifics of stash or stosh, as the case may be if you come from a certain background. But if they want to work with us, we would love to work with them. The more places and the more people who are invested either because they wrote us a check or they went shopping or they're promoting us, the better off we are. So the answer is yes. I simply don't know the specifics.
I actually suggested that Allison reach out to support. Might she be able to get some tips on how to ask Stash to work with us?
I think support is, as it always is a great answer. Hopefully they'll have a great answer as well.
Yes. Awesome. She does say that I know they sell stock for less than $4, so that is promising. I believe our final question, if you have questions, start typing now so that by the time I finish asking this one, yours will populate for us. David asks, do you make any money when we transfer our shares to issuer direct? Because it seems like the total $100 would take a year to recoup based on a share price of 10 cents.
The answer is no, we don't. That's what they charge us. It used to be a lot less than that, and it's gone up with time. They charge us $50 and we pass that right through to you. They don't actually charge us anything in between. So their business model is when stock goes in and stock goes out, they have to make their money. They don't charge us a monthly holding fee, for instance, but we do not make money on transferring the stock.
All right, and final question from Jeff says, is Rob taking a salary at this point? Is there a break-even point when Rob takes a salary?
There definitely had better be a break-even point when Rob takes a salary, but I am not taking a salary at this point. But that's okay. That's not something I whine about. It is. I've been fortunate in life to have built a bunch of businesses that made creating iConsumer possible, and it was never a worry about taking a salary from iConsumer, although I wouldn't mind. Don't get me wrong. It is about building value. I own an enormous amount of iConsumer stock, and when I'm allowed to sell it and it's the right time to sell, I won't be shy about selling it. That time hasn't come yet. I'm not allowed to sell it, but someday I'll sell it, or my children will sell it, or my grandchildren will sell it.
All right, that looks like all of the questions. I want to thank everyone for joining us. This has been very informative, and we appreciate your feedback and your questions. We did get a note on the closed captioning that it was poorly spelled and the grammar was horrible, which I do apologize for that. It is I guess you'd call a beta service that we are trying out to be more inclusive of folks who maybe need that written word to better understand what's going on.
I think the grammar is my fault. The spelling is their fault. The grammar is probably my fault.
All right. Thank you for that feedback, and thank you everyone for being a part of iConsumer.